welcome to Capital Market Live on Channels Television. I'm Ladi Williams. Time to summarize what happened in the markets in the week before Christmas. Well, let's get a quick summary now of what happened with the global markets. The European stocks rose slightly on Friday. The Stock 600 index inched up about 0.1%. In London, we see the Dow Jones, that's for the US, but in Europe now, we see in Europe, we see the DAX is 16,706 points, 0.11% up, while the CAC 40 there, we see that was down 0.03% at 7,568 points. The DAX was up 0.11%. So it's just a mixed picture we see right there in Europe. Let's take it on to Asia now. We see Asia Pacific markets were mixed on Friday with the Bank of Japan's October meeting minutes showing board members debated on how to communicate the shift in their yield control stance. Japan's headline inflation rate slowed to about 2.8%, down from 3.3% in October, as the slowest pace of inflation since July 2022. We see the Nikkei there was up 0.09%, 33,169 points. For the Shanghai Composite, that was down 0.13%, while the HSI was up 2.52%. Big move up there at 16,340 points. That was the markets in Asia. Let's get a check on U.S. markets now. See the S&P 500 rose on Friday after cooler inflation data, with the major averages registering an eighth straight winning week as Wall Street looked to extend its year-end rally. The broad market index gained about 0.17% to 4,754 points for the S&P 500, while the tech-heavy NASDAQ was almost 15,000 points. They're up 0.19%, while the Dow Jones is 37,385 points, down 0.05%. All right, let's bring it home now. So, got to check on the NGX now. So, the local bourse ended the week before Christmas in the green, up 2.26%, crossing the 40 trillion mark for the first time ever. So many new levels reached in this market. For trading activity now for the week was quite strong. We see volume there was up 2.47 billion units traded in the green, while value was at 53.78 billion naira, more than what we had in the previous week, while deals was at 35,848 for deals. Let's look at the sectoral performance now. We see the banking counter again shining 3.35%. Just the consumer goods was a laggard this week, down 0.70%. Industrial goods is also good, 0.33%. The insurance counter that added 1.70% for the week. We'll see the top gainers there was led by Infinity Trust, that was up 60.64%, closing the week at 4.43 naira, while Association Bus Company led losers 16.48% down, followed by Omatech Ventures and E-Transact. Well, as 2023 comes to an end, let's get a sense of how Nigeria's capital market fared in 2023 with sky-high inflation, currency devaluation, rising cost of living, all of this. Joining us now is Professor Uche Waleke, Professor of Capital Market, Director, Institute of Capital Market Studies, Nasarawa State University, KEFI. Great to have you on the show. Good evening. And compliments of the season.
Thanks, Ladi. Good evening and compliments.
Thank you for coming on. So how come, with all the macro headwinds in Nigeria, it seems investors in the capital market did reap good profit in 2023? Help us understand how this happened.
Well, it's not. Would I say it's not totally surprising, Ladi? You recall this is not the first time the market is outperforming an economy that is or that appears to be struggling. In 2017, if you recall, the economy was just getting out of recession. Remember, we had a recession in 2016, the recession that lingered up to 2017. But what happened in 2017? our market was, the equities market was number 3 in the entire world, returning 42%. Okay, we saw a replay of that in 2020. 2020, again, the COVID-19 year. Again, what did we see? The equities market was even the number 1 in the world, returning over 50%. So this year, again, as you rightly noted, despite the headwinds, despite steady rise in inflation rate, exchange rate issues, the market is returning or posting 42% year-to-date return. So that's quite remarkable. And to really understand, the import of this, you also need to place it side by side with the performance of markets globally. And one index you can use to measure that for emerging markets, for example, you can use the Morgan Stanley Capital Index that tracks equities performance in 24 emerging markets. That's Morgan Stanley Capital Index year-to-date return. If you check it, is reading 5.7%. Okay, so that tells you that Nigeria, what we have performance of our market is way ahead of for emerging markets. If you also compare it with developed markets, again, you can use the Morgan Stanley Capital World, for developed markets. It tracks for 23 developed economies. For developed markets, year-to-date return is around 17.5%. So, however you look at it, by all standards, our markets, have done, remarkably well. And, you are trying to ask the factors, behind that. Well, if you look at the market at the beginning of the year, recall that in 2022, yes, the market closed, the year ended at about 19%. Now, we saw a pullback, some of the gains being contained in the first quarter of 2023, largely on the back of the, currency redesign, issues. But again, the market, there was a rebound in the second quarter, such that by the end of the first half of 2023, the market was already up by as much as 18.9%. But what has happened in 2023, one could say, came more in the second half. Okay, so the boost actually came more in the second half, beginning in the third quarter, when the NGX All-Share Index actually crossed the 70,000, mark, and continued in the fourth quarter. A lot of people have attributed that to the reforms. Yes, I agree to a large extent. The unification of exchange rates, the fuel subsidy removal, which, of course, many consider as market friendly. Market friendly in the sense that international investors, lauded these measures, and so that sort of boosted confidence in the Nigerian economy. Coupled with the fact that, not too long ago, we also had favorable ratings from Moody, again on the back of the reforms that were introduced. So I would say the markets responded again in large part to favorable news announcements relating to the possible recapitalization of banks, news announcements in connection with the likely listing of Dangote refinery, and even the case of the NNPC Limited. So when you take all these factors into cognizance, again, against the backdrop of the fact that many quoted companies, particularly those in the financial services sector, performed well, despite the despite the foreign exchange challenges. You recall a number of banks posted foreign exchange gains. So on the back of corporate earnings, on the back of the reforms, we have seen this momentum. In the,
all right, Prof.
Today.
Talking about the reforms, at this time, and you did say most of the gains we're seeing is based on news at this time. Do you think we might see a sell the news kind of event, going into 2024 when we hit all of these reforms that we've been talking about?
Now, if we go back to recent experience, what you find is that there is, likely going to be a pullback in 2024. In 2017, when we had that 42% year-to-date return, what happened the following year? In 2018, the market tanked. The market tanked by as much as managed to eke out a gain of 6%. All right. Now you also look at 2020. 2020, the gain was as much as 50%. As I told you, it was the highest in the world. But what happened in 2021? Again, in 2021, we saw a decline. So there is no doubt about that. The market is not bound to stay up, forever. That's the nature of the market. So I want to see a situation in which some sort of corrections take place in 2024. So there is bound to be a pullback in 2024. You don't need a fortune teller to tell you that 2024 return may not be as high as what we've experienced in 2023. Well, if that happens, of course, I'll be happy, but that will clearly be a case of an outlier, okay? If you have been monitoring this market and even global markets, once you hit this kind of high, the next expectation is that, there will be, the market will, sort of correct. And again, don't forget that some of the actions, some of the things that are happening now will also impact the market next year, one of which is even the recent announcement by the central bank, now permitting banks to deal with cryptocurrency and all that. That will also have an impact, on the market, because you're also now trying to this is another asset class that will be coming to compete with equities and with bonds. So the market is likely to be affected by this. When you also take into cognizance the stance of monetary policy, the body language and stance of monetary policy, which going forward is likely going to be highly restrictive, what that also means is that the equity markets is likely to take a hit in 2024 as a result of contractionary monetary policy, as a result of the fact that inflation rate is still an issue. So these are the factors that will really shape performance of the market in 2024.
Yeah, we'll definitely be looking out for that. And talking about Bitcoin and the crypto market at this time, seeing that circular from the CBN allowing commercial banks to still deal with most of these crypto operators. So going into 2024, we've been hearing a lot about ETFs. In other markets in the US, they've been talking about a Bitcoin ETF. When do you see that coming on in the capital market in Nigeria? Do you see that happening at any time?
Well, I think the SEC is also adopting a proactive approach, to issues regarding crypto assets. Recall that sometime last year, there was also a circular, from the SEC with respect to the regulation of, crypto assets. And even in the circular by the central bank, it mentioned that the SEC, already has something on it, including the, I think there's also something that captures it in the Money Laundering Act. But what is important is that, these frameworks, need to be put in place, before we really we open up the space. All right. There's no doubt about that. If you have proper regulation, and some of these products are now being have innovations around these products. Of course, the entire market will benefit from it. But when they are not yet in place, and you are opening your doors to asset classes that carry very huge risk, very high risk, I am saying that the traditional products will eventually suffer. Don't forget too that you're talking about exchange traded funds. We have exchange traded products that are structured, if you like, on the conventional ones already in place. We have about eight, if I'm not mistaken, 8 exchange traded products, already trading on our markets today. So
all right.
I think it is important that these regulations are in place, before, as I mentioned earlier, we open our doors to
Exactly.
cryptocurrencies.
Definitely, 2023, a lot of talk about regulation in the crypto market, and I'm sure that's still going to reign in 2024. But we'll take a quick break. Now, when we come back, we still have Professor Uche Uwaleke. I'll be dissecting, the capital market in 2023 and get an outlook for 2024. Do stay with us. The conversation continues in a moment. Welcome back. Still watching Capital Market live on Channels Television. Let's get some top stories this week in the capital market. We see Nigeria's total external debt stock decline in the third quarter of this year to $41.59 billion as of September 30th, down from $43.16 billion reported as of June the 30th. According to latest report released by the Debt Management Office, the $1.57 billion decline in the debt figures due to the redemption of Nigeria's $500 million Euro bonds and the first principal payment of $413.859 million of the IMF's $3.4 billion loan obtained during the 2020 COVID-19 period. However, the DMO says the country's total public debt, which comprises debt from the federal government and 36 states, as well as the federal capital territory, increased by 0.61% quarter on quarter to 87.91 trillion naira, up from 87.38 trillion naira. All right, let's bring back Professor Uche Uwaleke, now Professor of Capital Markets, Nasarawa State University. Thank you for staying on, Prof.
Thank you, Ladi.
All right, so Prof, still looking at the capital market in 2023, I'd like you to compare the equities market and the fixed income market. Which segment gave investors presents this holiday?
Well, it's obvious. It's obvious, like the equities markets. Look at the returns. We are talking about 42% return. That's positive real rate of return. Positive return. When you take into cognizance inflation rate. Inflation rate is, if you take the last figure, 28.2%, and then you have a return that is 42%. Of course, that's positive. You don't have those kinds of return from the fixed income. And you see, when I was talking about, I'll get back to the fixed income shortly. Let me mention this point. When I was talking about the chances of the equities market, plummeting in terms of return in 2024, it's going to be influenced partly by the base effect. The fact that the all-share index is already very high today at 70,000, at over 70,000. Of course, if you're going to compute return for 2024, you will start from that base, that high base of 70,000. So if the all-share index eventually ends up in 2024, at whatever figure, you'll be comparing that figure with the 70,000. So the base effect is likely going to affect the returns investors are going to expect in 2024. Now, back to the fixed income question you asked me. If you look at the average 10-year, return on 10-year bond, okay, at maybe 15%, compare that with the what we have in the equities market. And mind you, even if 2% is just the average, all right? If you take some index, okay, let me even use the indexes as opposed to specific stocks. The oil and gas index, for example, posted 124%. Oil and gas, where you have especially the likes of, Seplat. They followed by the banking. The banking index is at over 100%. I think 105%. The likes of Access, UBA, Zenith, Jitco, all contributed. And then you also have even the consumer goods. Where you have the Boa Foods, the Dangote Sugar. I think consumer goods came in at around 94%. So you can see the kind of returns investors must have earned from the equity segment of the market, way high above what you have in the fixed income. In the fixed income, particularly the fixed income capital. That's where you talk about bonds. I've just told you the average, for a 10-year bond, maybe 15%. In January this year, if I recall, I think it was around 14. And then as we speak, maybe around 15.5. That's 150 basis points increase. If you recall, the last sukuk that was done by the DMO. In October, the DMO issued bonds, sukuk, a 10-year bond maturing in 2023 at 15.75%. So that's the yield. Yield is interest over the market price. So when you have that kind of return, okay, you compare that with what you have in the equities market, you can see that the returns in the fixed income market are still, in the negative territory because inflation rate is quite high. And even if you veer into the money market segment, you even get lower returns, much lower returns. At the beginning of this year, for example, treasury bills, 91 treasury bill was just around 1.51%.
Okay.
Maybe recently, maybe around 5%. 92-day treasury bill at the time was around 4. Okay, today you are talking about 6, 7. Then 182 was around 6. Okay, today you're talking about 11. So in the money market, again, returns have not been as high as what you even find in the capital market. We are talking about treasury bills, commercial paper, OMO bills. These have all been relatively low, compared to what we have in the equity segment.
All right.
And even compared to what we have in the in the bonds market.
So Prof, definitely the equities market outperformed the fixed income market in 2023. But going into 2024 now, coming into 2023, most analysts expected risk off sentiment, with all the economic headwinds and inflation rising. So going into 2024, should the strategy be risk off for investors here in 2024?
Yes, always. Always, you see, we are in an environment, some describe it as a VUCA environment, and that VUCA environment will linger till 2024. And if you look at the budget, 2024 budget proposal, okay, you can also see bits of the uncertainty in that budget proposal. For example, the exchange rate in the budget is at $750 per barrel. You and I know that that's likely to be, that may not crystallize at 750. Inflation rate in that budget is around 21.4%. 4%. GDP growth rate 3.76%. So you see some level of uncertainty also even in the document we are. The government is pushing as the budget for 2024. So amidst this VUCA environment, volatile environment, uncertain environment, complex environment, ambiguous environment, that's the meaning of VUCA, by the way. So in all of that, the best for investors remains to be risk conscious, and by being risk conscious, one way to mitigate risk is to diversify. All right, so diversify investments, and also attempt to have a longer term perspective, because for me that's what will pay investors in the long run. Today we are expecting that the bank recapitalization proposal will further boost activities in the market. We're also expecting that Dangote refinery will be coming to list. Of course, these are prospects. That's what I'm talking about, longer term perspective. Again, I mentioned it earlier. It's also going to be a factor that will shape performance in 2024, the monetary policy stance. There is no doubt about that we should expect tighter monetary policy in 2024. We should expect that the MPR in particular is going to be increased. As a matter of fact, I said it at another forum, that the fact that MPC did not meet twice this year, okay, kind of also rubbed up positively on the equities market, because if MPC had met for the fifth and the sixth time,
we would have been more high.
Would have been, Oh yes, in a hike in the MPR. So, but that will be inevitable in 2024. MPR is going to go up.
Okay.
And if that goes up, it's usually
exactly
to the detriment of the
inverse relationship
segment of the market.
All right. Thank you so much,
Absolutely.
Professor, for sharing your weekend with us. Definitely, we're all looking forward to Christmas celebrations and all of that festivity. Thank you for coming on, Professor Uche Waleke, Professor of Capital Markets.
Thank you, Ladi.
Director, Institute of Capital Market Studies, Nasarawa State University, KEFI. Thank you. All right, so that's the show today. I'm sure most investors did get their Santa rally in the equities market. Definitely looking out for what happens in 2024. Thank you for watching. I'm Ladi Williams. And remember, if you must take profit, find the top.